Hi, my name is Ross. At the end of this quick video, I'll give you the link to find out quickly if your business qualifies to receive this cash from the government. What employers need to know about the Employee Retention Tax Credit. Employee retention tax credits provide a much-needed boost to organizations struggling to recover from the economic effects of the COVID-19 pandemic. These tax credits can help employers hold onto their talent as well as draw in new qualified employees. The credits do this by reducing the payroll taxes employers pay to the federal government and incentivizing them to retain employees. Employers should be aware that not all workers qualify for the Employee Retention Tax Credit, ERTC. The Internal Revenue Service requires employees to meet certain criteria in order to be eligible for the credit. Eligible employees must be full-time or part-time, have been on the payroll from March 13, 2020 to December 31, 2020, and have had their hours reduced or their wages reduced due to the sudden economic impact of the pandemic. Additionally, the ERTC is available for employers who have had a significant decline in gross receipts, meaning their gross receipts have been reduced by more than 50% from the same quarter in the prior year. The actual tax credit benefits employers by allowing them to offset their federal payroll tax liabilities with the ERTC. Specifically, the tax credit rate is 50% of up to $10,000 in qualified wages per employee. Qualified wages include income, health benefits, and employer retirement contributions. Additionally, employers can take advantage of the retroactive period, which allows employers to claim the tax credit at 50% of up to $10,000 in qualified wages paid to employees during any quarter in 2020 that experienced a decline in gross receipts. When it comes to claiming the Employee Retention Tax Credit, employers will need to prepare to navigate the complex maze of rules and requirements. Employers should plan to work with their tax advisors to ensure that they are taking full advantage of the ERTC and in compliance with the IRS regulations. It's important for employers to understand that the Employee Retention Tax Credit is not a one-size-fits-all solution. Employers should assess their individual situation to determine whether the ERTC is a viable option for them. Additionally, employers should take into consideration the timing, as the ERTC must be claimed in the tax year immediately following the tax period during which the qualified wages were paid or accrued. Employers considering using the Employee Retention Tax Credit should understand the complexity of the system and work with their tax advisors to make sure they are taking full advantage of the tax savings and minimizing any tax liabilities. By doing so, employers can take steps to protect their talent and give their business the financial relief it needs to recover from the pandemic. We hope this video was helpful to you. To find out in just a couple of minutes if this is something that you should probably pursue, go to refundablecash.com. Good luck.